Hey everyone, and welcome to our first video of this video series that I'm starting. It's called Forex Notes, and this is TSW Forex. So this is our Forex educational notes. This is an introduction, and in this introduction to Forex we're going to discuss what is Forex slash stock market comparison, how the Forex market works, Forex currency pairs, and Forex market structure. What is Forex? Now, unlike popular belief, Forex is not a word, it's an acronym. Forex stands for Foreign Exchange. It is the world's most traded currency market, or the world's most traded market. It has a market cap of over $5 trillion. And by comparison, London Stock Exchange has $7.2 billion. Tokyo Stock Exchange has $18.4 billion, while the New York Stock Exchange has $22.4 billion market cap. Now, the market comparison is here represented on a bar graph, and we have, as you can see, that $7.2 billion from the London Stock Exchange is so small that it can't even be shown on the bar graph. So this is just showing you how vast and how big the market cap of Forex is. Alright, so we have Forex and Stock Exchange comparison. Now, the US Securities and Exchange Commission regulates the US stock market, and as you can see, there is a photo of that official building on the bottom left of the screen. We have the market, which is the Forex market, is somewhat regulated by the Bank of International Settlement. Now, the Forex market is somewhat regulated by the Bank of International Settlement, as seen on the bottom right of the screen. Now, there's something that all should know. It's rather contradictory or ironic that the bank that regulates Forex, which is done by central banks, is owned by central banks. So the Bank of International Settlement is owned by central banks, yet it monitors central banks. So that's just the kind of dilemma that's there. It's kind of a weird situation there. Alright, so how the Forex market works. The financial institutions such as banks, our central banks, hedge funds, etc., and people move money from one country to another from time to time. And in order to move money, one has to sell one currency and buy another. For example, if you want to move money from the United States to Canada, you have to sell your US dollars and buy Canadian dollars. Now, this buying and selling creates a shift in price as the demand changes for each currency, falls and rise respectively. Forex market structure. So at the top you have major banks, and those are the big banks that control the currency of each country. They're called central banks. For example, the Bank of Canada, BOC, they are responsible for the currency of Canada, and the Bank of England controls the bank of all currency that's related to England, etc. So you have those at the top. Then you have electronic brokering service and Reuters 3000 Extra, which was actually phased out, I think, in 2013 by Icon. So it was started in 1999 and it was phased out by Icon. And Icon is a platform that gives you analytics, it gives you news, it has messaging service, trading platform that almost similar to Bloomberg, with just a trading platform. So it just gives you information that are needed for trading. And then on the third, we have medium-sized and small banks. Fourth, retail marketers, retail ECNs, hedge fund and commercial companies, and retail traders. And retail traders is basically every single individual who basically trades for themselves. So including myself and others who say that they are traders, we are called retail traders. So we are basically at the bottom of the food chain. How the Forex market works continues. So this rise and fall of price data is reflected on a chart. And since banks and institutions carry the bulk of the market, they trade off levels. Now traders read this chart and try to profit by buying and selling. This is done by trying to predict the highest probable direction or movement of price in the future. Alright, so here's an example of what the price would look like on the market So this is what we have, different time frames, and each of those bars that you see on the screen, whether blue or green, is called a candlestick. Now, the time frame that you select means it takes that specific amount of time to form each candle that you're seeing. So we have the monthly time frame now, which means each candlestick represents 1 month of data. And as you can see from left to right, we have price falling from the top, and it's basically fluctuating up and down as demand rise and demand fall for the euro versus Japanese yen. So this is an example of what the chart would look like, and traders analyze this chart from a higher time frame to a lower time frame called top-down analysis, as we try to predict the next movement for price. Forex currencies. Each country has its own currency, which is controlled by a central bank. This currency is represented by 3 letters. The most traded currencies in the world are called the majors. They constitute the largest share of the exchange market, which is about 85%, and therefore they exhibit high market liquidity. So this is just a map that is representing how each country's currency would be. So for Canada, you have CAD, US dollar you have USD, and euro you have EUR. So basically we have 3 letters that represent each country, our region, our zone, depending on where you are. So the currency is represented by 3 letters. Major currencies around the world. So these are the main currencies that are traded with the highest liquidity. We have US dollar, British pound, euro, Japanese yen, Switzerland, which is the Swiss franc, Australian dollar, New Zealand dollar, and Canadian dollar. These are the top traded currencies around the world. Alright, major currencies around the world. The most traded currencies around the world are as follows, and these are the top 4 in order. You have the US dollar, number 1, euro in second, the Japanese yen in third, and the British pound in fourth. Currency pairs. A currency pair is made when one currency is represented versus another. A currency pair consists of a base currency and a core currency. A base currency is represented by the first 3 letters of a pair, while a core currency is represented by the last 3 letters of a currency pair. Since the US dollar is the world's most traded currency, all world major pairs consist of the US dollar in it. The majors are as follows. So as you can see, all these pairs contain the US dollar, and therefore they are considered the major. The only reason why they are considered the majors are because they contain the US dollar, and that's it. Now the minors, when a currency pair does not include the US dollar, it is called a minor pair or cross pair. A cross currency pair is minors. When a currency pair does not include the US dollar, it is called a minor pair or cross currency pair. Now earlier we showed the top 8 traded currency pairs, taking out the US dollar out of that, and all those pairs, once they contain any of those 7, they are considered the minors. For example, you have the Euro GBP, Canadian Japanese yen. So any of those 8 linked together, or any of those 2 linked together of the top 7 that will be remaining, that will create the minors. When can you trade the Forex market? Alright, trading sessions. The Forex market is a 24-hour market, unlike the stock market, which is not. It is because each country's 8-hour trading session overlaps as the sun moves westward. This causes an effect that allows a 24-hour open market 5 days a week. Currency pair breakdown. And as we said earlier, that the first 3 letters represent the base currency and the last 3 represent the core currency. So we're going to explain that a bit. As you can see in the currency pair Euro USD, we have EUR USD. The EUR represents euro, and that's called the base currency. And then we have USD, which is the last 3 letters in the pair, and we have that called the code currency. Now here's a chart representation of Euro USD. What you're seeing on the chart is euro, which is the base currency. That's the one doing the movement. So in any pair that you're trading, the base currency, which is the first currency that you see, whatever the chart is showing you, that's what it's saying it's doing versus the other pair, or the other currency, I should say. So in Euro USD, the chart that you click on, you are seeing what the euro is doing versus the US dollar. So at the top, from left to right, we see that it's slowly dipped a bit, then rise, go up to the top, and then it start to fall. And right in the middle of the screen here, you can see that it found support, and then it started to rise. So that's what the euro is doing versus the US dollar. Thank you guys so much for watching. You can click the link in the bio for my Instagram profile, and you can follow for more content. I'll be posting a lot more videos as it relates to Forex educational notes. And leave a comment, like, subscribe, or share ideas that you want me to elaborate on. Thank you for watching.